what we were talking about. Now, just to make a sense of it, what we are seeing is this is very recent, very current, right? Last 2.5, 3 months. So what we are seeing is that the prices which started around 2800 have come back to 2800. They fell to as low as 2550, 2600 because there was a sudden surge in inventory in the warehouses, and that typically leads to some action in LME prices. Not very often, but it does. Now, recently, what has happened is that we have seen a huge inflow of metal at New Orleans. Now, some premium trends. Pardon me, I'm only talking about as far as premium are concerned. I'm talking about my region in and around India, so that will be typically Southeast Asia, Shanghai, Malaysia, Singapore. And what we are seeing is that October onwards, it's a flat line, which is a bit surprising because we have seen an unprecedented container crisis, and the ocean freights have gone up. So, but it is not reflected into premium. Premium have more or less been the same. In some cases, they have improved by $10, which they generally do at the time of fresh contracting. Lead, since no discussion with zinc can be complete without discussing lead, a very similar graph except for the prices. Lead is not able to sustain the prices like other base metals, and it falls down very quickly. It's very elastic to what happens in the market or if the inventory levels go up because of the competition from secondary, of course. But the winter season is generally good for lead prices. It was good, you would say, till Feb end, and then the prices fell because the demand is from North America and cold countries. The automobile sector, which and India is a major contributor for automobile sector, it did good. It did, I would say, surpass expectations. Post-COVID, the months of October to December to January were actually good for automobile sector, and that's why it helped it. But now we are seeing lead going back to its previous levels of around 1900 and so. That's it. Just to set a tone on what is happening in the market, trying to make sense of what is happening. We never know what will happen, but it's good to know that there are mainly 2-3 factors. One is China, another is the warehouse inventory, which give a very good indication of what is happening, and the third is, which we never discussed in detail, is actually the amount of investors which are in not just zinc market but in the base metals market. And the reasons for it, is crudely explained, is that if there are no new projects coming up, the project financing guys need to earn, right? So they do invest in commodities. It also hedges against inflation because there's a lot of free money available because of stimulus packages. The same can be said about equity market, but that's a story for some other day. So I think the investors are there in base metals, and it also explains, other than the concentrate prices, it also explains why the prices are here where we see them.
So Aprami, like I said, did a great job of covering off on the different aspects and the drivers right now for the zinc market in terms of the economic aspects, China and so forth. So I just wanted to put in a couple points here. As we all know, zinc production was reduced in 2020 due to COVID. Zinc demand was also reduced by about 5% during that time from COVID. As he noted, we've seen a very strong recovery for the zinc market post-COVID. China was able to do some major investment in infrastructure and stimulus that helped prop up those activities in China and mitigate. So one thing I wanted to note when talking about the zinc market is zinc is very much linked to the steel market. So if you look at the overall steel market, only about 6% of that is actually galvanized or protected with zinc from corrosion. And this protection is absolutely essential for society, for communities, for governments, because It's been estimated that about 3 to 4% of GDP is lost just from the corrosion of steel when it's not protected properly. So zinc is the best way to do that protection. It does it in a number of different applications and formats and so forth, and it does play a key role in helping to increase the sustainability. One of the key areas that plays a role is in automotive. Obviously, steel is the main material used in automotive, and that's true going forward with the focus on electric vehicles. And I know a lot of people are focusing on what's happening in the electric vehicle market and thinking about Tesla and groups like that. But the reality is that steel and zinc, the galvanized high-strength steel that's out there, has a very strong future going forward in the automotive market, and that's the case across different automotive types, but also for electric vehicles. Another area I wanted to focus on here with regard to net or neutral carbon and so forth is the tremendous potential we see for zinc in the stationary energy storage market for batteries. There's a very robust market potential growth for zinc in key markets, including automotive and batteries, as I mentioned. And this ties into the ability and probability for zinc to play a key role in the shift for society going to a more of a carbon neutrality situation. So not just automotive, like I highlighted before, with the lightweighting efforts and so forth, not just the batteries with the energy storage, but also offshore windmills, frames for solar panel farms and so forth. Galvanized steel and zinc play a key role in all of these, and the future is very bright for zinc going forward in that area, and we expect the demand to increase as a result of that.